What is up, guys? For today's video, I'm going to go over the hardest part of trading, which is the emotion and the psychological side of trading, how I kind of handle that, and what I do to go about taking as much emotion out. I'm going to focus heavily on entries and exits, risk management, as well as tell my story about PayPal, which is something that can really be learned when it comes to coming back from something that almost wiped out my account. Before I start, people have been asking a lot about the volume profile. So here on TradingView, it is under Technicals, Volume Profile, and then it's the Visible Range Indicator. This is the one I use every day. So there's that. So when it comes to trying to take out our emotions, the biggest aspect for me is pre-trade planning, creating a watch list, evaluating what strike prices I'm going to play, what my triggers are, what my key levels, where I'm going to scale, stuff like that, in order to take this out and really know how I'm going to trade it before the trade even comes. The pre-trade is really what it takes in trading. When it comes to the actual execution piece, if we prepare well enough and know what we're going to do, the execution piece becomes second nature to us. So as always, I'm just going to run through a possible play here for Tuesday's watch list and kind of go over my pre-trade routine as well as pre-market routine in order to get myself mentally ready to prepare and go execute a trade. So the first thing I'm looking for NEO here, I'm going to break down some flow. I'm looking for those high volume OTM calls. And on NEO, ones that really stick out is this 35 call here, as well as this possible straddle type play with the 45 calls, 25 puts. But we also have nice action on 31 calls, 32 puts, 30 puts. So I like that as a play both ways. When it comes to levels, I'm just going to look for a trigger. So my first thing I notice, I'm going to use that 15 or the 20 to 25% method to look for a trigger. And the reason I use this is because I don't want to miss a play too big. Some people use prior day highs and lows, and that can work for them, but this is just my preferred method of choosing a trigger. So what I first noticed is this level here, 31.35. It's acted both as support and resistance, almost tested it again here before ultimately falling off. So I like that for a call trigger. On the put side, I don't want to go too crazy low, but I also don't want to go too crazy high. So this level here at 30.45 I notice is pretty big. It's been tested multiple times. It was a high here before ultimately falling down. So I like that level there for a put. When it comes to selecting a strike price, I'm again going to use flow. And I'm going to look, what's being hit, and then we're going to couple that with our levels to see, what we're going to trade. So this week's going to be a 4-day week, shorter week, but we also know that Monday through Wednesday usually we're going to be able to play those 1 to 2 OTMs. We have a little bit more time on our side, but not too much time. In this case, over 31.35, I'm going to use this. Let's see, 32 calls. I'm going to play 32 calls. It's getting hit pretty good volume, so I'm going to play 32 calls over the 31.35 area. And then on the downside, I'm going to play 30 puts for sure. It looks like we have a lot of volume down here. Now I'm going to go through and just look at levels that I can use as possible scaling points. And the first one I notice here is about 30.3 before it really bounces. It's also a big level here on the VPA. So I'm going to use this, make this yellow. And then the other one, down under here, I'm going to use the hourly, see if these levels can be a little bit bigger. Yeah, perfect. So this level here, about 30.10 to 30, is also going to be a big level. So I like that. When I'm looking for a play, I'm going to look for about 2 to 1 risk to reward ratio. And also just going through this, I can really set out ways and know where I'm going to scale. So I'm prepared for the trade, right? So that's something really cool to see. The second, notice on the top side, My first target is going to be 31.55. I like that a lot. And then over that, I like up here about 31.8 to 32 area, 31.81. Cool, perfect. Now when it comes to pre-market, what are my thoughts? What am I thinking, right? So I want to know what the ticker did post-market. If a ticker or pre-market in this case, did a ticker gap up? Did it gap down? How am I going to play the gaps? Or is it still within our ranges and we can wait and play these based off of our key triggers? So how I play the gaps is I always wait on a retest, right? If it gaps over, I'm going to wait on a retest of the call trigger. If it gaps down, I'm going to wait on a retest of the put trigger before I enter any plays. Planning out the trade the night before and really taking this time, it really helps us in that first step of taking emotions out of the equation. Therefore, we can trade price action, right? We want to trade price action. We don't want to trade based off of emotions. Now that we've kind of gone through, the basis of our pre-trade planning, have this kind of mindset, what we're going to do with the trade, I'm going to go more into the execution piece. In this case, I'm going to use DKNG from Friday to kind of go over, what I saw and also some key things here, right? So for DKNG, my call trigger on Friday was 24.8, put trigger 23.75. A personal rule of mine is do not trade within the first 15 minutes of market open. And this is simply because usually the premiums and the bid-ask spread goes all crazy. So I don't get a great fill most of the time. And it's ended up costing me here and there. So that's just a personal rule that I don't trade off the opening bell. I wait those first 15 minutes before entering a trade. When entering a trade, I'm looking for a 5-minute candle close below or above a call or put trigger. In this case, and the reason I do this is because DKNG, we have this bounce around in here, right? But it does close below here. So this starts to get me thinking, it's probably going to go to the put side. All right, cool. I didn't get filled here. I got bounced around a little, and I ended up, we closed again here, 23.74. This was my entry. I got a pretty good entry here. We were also below the VWAP, but we see the second candle retest, and then we get a nice bounce down here on DKNG. Also, when entering, I'll use the type of candle to kind of help with my confirmation, right? So if I'm playing puts in this case, this is a big bearish candle, and it closes below our trigger line, our key level trigger point. So this gives me high confidence that DKNG is going to go down, and it's going to be a pretty good move. As we saw, I talked about in the small watch list on Friday, there was not much controlling it between 23.75 and 23.25. I personally use market orders when entering into a trade, but we also need to take into account that certain tickers have different bid-ask spreads, right? So for this instance, DKNG, it was like a 0.03 bid-ask spread. So I used that market order and was able to get in here pretty good. Other tickers such as SQ, I know is a big one that has some weird bid-ask spreads. So in that case, I'd probably use a limit order just because if I don't get in or filled at a great price, I'm going to be down 10 to 15% right off the get-go. And that is a pretty substantial move that I have to make back up in order to be profitable. My personal favorite way to play my watch list are retests and then failed call or put triggers. When it comes to entering into a retest, my favorite two types of candles and what I look for is, say that this 23.25 is our put trigger. So if I'm going to enter puts, I like a candle like this as a long upper wick in order to enter puts. On the flip side, say that our call trigger was 23 and we get this nice doji here that bounces below but closes over our 23 level on high volume. I like to enter into calls there and use the longer lower wick to enter calls while using a higher and longer upper wick to enter into puts. So in this case, DKNG definitely didn't fail the put trigger. It triggered down. But if we were to look at this inversely, and this is a nice hammer candle off this level, and it pushes up, I could play the opposite. So in this case, if it was a put trigger, I could play the calls, and vice versa. And then with the retest, I like to wait on the retest because oftentimes we get a lot better fills than we do early on. That's the reason why I play retests on gap ups and gap downs, as well as just intraday, especially if it passes either my call or put trigger within the first 15 minutes. I'm going to wait on the retest before trying to enter the play. If a ticker just completely flies up, which is going to happen in some cases, I'm not going to play it because I don't want to chase, and the risk to reward ratio gets diminished very heavily. So that's something that I look for as well when playing the retest. I think it just helps a lot, not only with entries, but also helps with our risk to reward ratio. For me, I'm looking for that 2-to-1 at least risk to reward ratio, just because I want the benefits to be higher. I want the possibility of me making money to be higher than the risk, and that risk in this case is 10% for me. That's what I set my stop loss at right when I enter into a play, and that's just something I've done. I set a hard stop because it helps me with the discipline side of things and also take the emotions out more than a mental loss does. Along with knowing the bid-ask spreads of the tickers that we're playing, another way that Unusual Whales helps and why I use the hot chains and tickers to make my watch list is because we need volume in order to get in and out, and we need liquidity in order to get in and out of our trades and filled at the prices we want to get filled at. Before I get into the risk management side of things, I want to talk about questions or thoughts that we have, the emotions we have, and I certainly had as a younger, more beginning trader when entering a trade. And one of those is, what happens if I get faked out? Or what happens if I don't get filled and then the stock ends up flying? And these are the things we're trying to control with our entries and with using key targets as well as that pre-trade planning in order to be really, really set up for our trades. And my answer to that is, getting faked out is going to happen. I was actually faked out on NVIDIA the other day. I'll use that as an example here in a minute, and kind of my thought process behind that. But we're not going to win every single trade, and that's okay. That's why we have risk management, and that's why we set those stop losses right, is because we don't want to lose too much. When it comes to, I didn't get in or I didn't get filled and then it ends up flying, oftentimes we're going to want to chase that, and then we're way off of our levels. We don't know exactly where to exit, where to enter, stuff like that. We end up losing money, and then it starts bouncing. So that's something, when not to chase. Chasing is when the FOMO sets in, right? The FOMO of, I missed out, so I need to get in, and we end up chasing high prices. We get a normal, healthy pullback, and it causes us to be stopped out, or it breaks through that key level and falls, and we didn't have a stop loss put in place, causes us to lose a lot of money and can blow up those accounts. So in this case, chasing would be entering down in here. We're below that 2375 level, right? But we get a hard bounce back with buyers. It ends up paying out, but if we entered in here, we're probably going to get stopped out first before we even have a chance, and then it ends up plummeting down. We would have paid nice. So that's one thing we want to take away as well, is the emotions of, I missed out, I got to get in now. Instead, stay patient and stay to our levels when entering and exiting. Now comes the hard part, but also the most beneficial part to managing our emotions is the risk management side. So for me, I set a 10% hard stop loss once I enter into a trade, and I do that as just a stop market sell. And this is also where the pre-trade routine and that pre-trade planning really comes in and can really help us. As stated before, on the live watch list, I discussed 2375 is my put trigger, with 2325 as my real level to watch to scale out. So my first scale in my personal scaling theory is I scale out in thirds. The reason for that, it just makes sense to my mind. My first scale is always 20%. After that, I'm going to keep adjusting my stop loss up. At 20%, my stop loss will be at that 10% mark to make sure that I am profitable on trades. And compounding really helps in those short-term gains. Maybe 5, 10, 15, 20% really add up over time. My second scale is going to be at the next big level. In this case, it's 23.25. So scaling in here would be my second one. The third one is going to be my runners. After that, I'm going to set my stop loss, around that 30, 40%, whatever this would be, and then just let it run, right? When fully exiting a trade on the put side, I'm going to exit a trade when there's a long lower wick, in this case here, or down in here, you can't really see it. This doji here would be a good place to exit fully. But on the call side, a long upper wick, such as this one here. Let's see, any other ones? Here, if this were to be up against a point, I'm going to fully exit on those because that shows us that sellers are stepping in heavy at a resistance level, and the likelihood of me or the play going up further is pretty slim. So I'm just going to cut it there, take my profits, and not look back. First, stop loss. If you're struggling with stop loss or your entries, I would recommend using about 15%, because a common question people have asked, in DMs or on Twitter is my plays. I feel like I'm getting good entries, but my plays, they hit stop loss and then go soaring. So in that case, I would say adjust your stop loss to 15%. And what I mean by 15% stop loss is 15% of the capital put into that play, not 15% of your overall capital, but how much you put into the play. And that gets me perfectly into sizing. So for a smaller account, when I had a smaller account, it was about $200 to $300. I wouldn't use anywhere over 25% on each trade, which that makes it a little bit harder, but it helps ensure that we don't lose too much money on a trade. Now I'll use about 10% of my account on one trade max. If I have high confidence play, I'll use that 10%. If I have a pretty low confidence play, but there's potential, I'll use that 5% level usually to ensure that I don't lose too much on one trade. I know it's harder for smaller accounts. So say, the $100 accounts that may be able to take one contract, that's okay. Take that one contract, but make sure you have that tight stop loss so we don't lose too much on one singular trade. When it comes to, the amount of contracts we purchase, if we're struggling with entries or we're struggling trading recently, I would suggest just starting with one contract and scale at that 10, 20%, but make sure we're taking gains. And these gains will start to add up, also boosting our confidence and helping with the emotion side that we talked about a lot earlier and throughout the rest of this video. Once we start to get a little bit more confident, start to build up some confidence there, and these trades start to work for us, we can start building up our sizing. Start with 2, then 3, then keep going until you're confident in your trades and you've really developed a strategy that works for you and your trades while managing our risk and never putting too much capital on one trade, as that can really blow up an account pretty fast. I talked about NVIDIA earlier, but NVIDIA was my biggest loss this week, and the reason for that was, I'll actually show you. So on NVIDIA, if I can get over here, it was a Thursday trade, and the call trigger was 28.15, and so I entered here on this candle. It was right around that 15-minute mark. It was a pretty nice doji candle inside, and it closed above the 282.15. So I entered there, and then not even 5 seconds, 10 seconds later, my stop loss immediately hit because I got faked out. Faking out happens to everyone. And in the end, maybe this call trigger wasn't too great, but I got faked out right here, and thankfully I was able to get my stop loss in time. But if not, I could have lost 10, 15, 25% in less than a minute, as NVIDIA just continuously tanked throughout the day. But being faked out, it happens to everyone. It happens to me. on occasion, every now and then it does happen. And most of the times it's on something like this. So that's something, to watch for. Another thing, whenever I trade, I always have SPY open, because SPY can help show the overall market trend, market sentiment, where a ticker might bounce and stuff like that. So I use SPY to add confirmation when entering into a trade, and just kind of map out the levels, know the levels. You don't necessarily have to watch SPY all the time, because some tickers do have relative strength and some have relative weakness. So just having the overall knowledge of what the market's doing can help a lot when adding confirmation to our trades. Now comes the fun part and the hardest part of trading, and that is the psychological side. So for me, I'm going to use a personal story here. PayPal was my biggest loss to date. What happened on PayPal was, it was a day trade that went really well for me. I traded this inside bar. I actually got in early. It was an alert I took. Shouldn't have taken it, whatever. But it was in here. I entered in here and ended up holding it overnight, on a weekly expiration date. So that also wasn't smart. But then ended up tanking. I held it, I think, even a couple days, trying to get the most out of it. And really, I got greedy, right? And greed is the #1 killer of accounts. It'll blow up your account faster than anything. So the reminder there is, take profits. Take profits. But for me, since that day, I made it a goal of mine to trade PayPal every day until I mastered it. Whether that be just looking at price action and playing out where I would enter, where I would exit, stuff like that, or actually playing it with real money. Since that day, I have not taken a loss on PayPal, because I made it that mission that PayPal is not going to beat me. And I'm not saying these are big wins or big, crazy 100%ers. There might be some every now and then, as I've traded it for the last month and a half consistently. But really learning how to manage a system and a ticker can really help us a lot when it comes to trading. I haven't really changed these lines on PayPal in that time, and I've just been able to trade off them based on how a candle closes above or below them, and using those trigger levels in order to make pretty good trades on PayPal. The question was asked, how do I respond to a bad trade? How do we bounce back from a bad trade, a bad day, a bad week? And the way that I really was able to do this was try and take as much emotion out of the equation, developing a system, in my case, to get the overthinking out. But also, take greed away and then evaluate our trades. Once the market's closed, go back in and look at where did I enter and why did I enter, and try to really understand that. And then look for, where's a better possible entry spot, and why does that spot work? So I go back every day, still to this day, and evaluate my trades. Why did they work, and why were they successful, or why did they fail? Being successful is nice, right? But we're going to learn more from failing than we will from benefiting. So really take those losses as a learning opportunity instead of something that gets down on our psyche, and it really starts to hurt us even more than just the monetary loss. It starts to affect our emotional outlook on trading and how we trade, and then we continue to carry that on. So the thing there is, take the emotions out as much as we can. And it's really hard, and that's why trading is so hard, because not only is there technical stuff we need to look at, but the trading actual aspect is really, really driven on psychology. And, draining account is super, super duper draining on our mental and emotional side. So that's something, we really want to take into account and really try to work on, is the emotional side of trading. To wrap this video up, we're not going to win every trade, right? But when we put in these rules and we put in all this time and effort pre-trading, and then we're able to then trade and already have the trade out in our mind, where we're going to enter, where we're going to exit, it really can help us a lot when it comes to being profitable in the trade. but we need to take losses and wins the same. It's cool, give yourself a fist pump, whatever, when you get a big win, but then lock back in. Same thing with a loss. We could be down for a second, damn, this sucks, but take the time to learn from it and really learn where you messed up, as opposed to letting it affect you the next trading day or the next trading week. At the end of the day, a successful trade doesn't necessarily mean you're green or you're red, right? A successful trade to me is, did I stick to my rules, and was I a successful trade for me is, did I stick to my rules? Did I chase an entry? Successful trade to me, I evaluate, did I stick to my rules? Was my entry a good point? Did I get faked out? If I got faked out, cool, so be it. I have my risk management stuck in place so that I don't lose too much on one singular trade. Did I avoid chasing? That was a big one for me, especially to start, was don't chase just because someone alerted it. Learn my system, really focus on these tickers. During the day when I'm actually trading, I stay off social media and just stay to my tickers. Another thing is, the question was asked, what do I do if the tickers on my watch list are range bound, not too much movement? And for that, I would recommend really learning 3 to 5 tickers and putting them on a watch list that you could trade any day, no matter what. For me, that's PayPal, Neo, Microsoft, and Facebook, as well as SPY. SPY can be range bound, but we can also play failed call and put triggers on these tickers when there's more of a chop day, and we can just play them within the ranges, right? But once we start to learn a ticker, learn where it will bounce, where it will fade, the key levels of it, it can really help on those days that are a little bit more stagnant and there's not much going on. So that can really help there. If you don't know 3 to 5 tickers, I would suggest really focusing on that this week. Focus on 3 to 5 tickers that you can learn their price action, learn their bid-ask spread, learn their personality like it is your own personality. And that really helped me become profitable, was learning 3 to 5 tickers, in this case these 4 tickers and SPY, and being able to trade them every day. Once we learn those tickers, we can start applying the knowledge we learned from those tickers to other tickers in order to build this consistency. We always want to compound gains and keep our risk in check. That's something really big as well. And it also can help with minimizing the greed and the emotions. That is why I emphasize building a watch list so heavily, is because it can really help the pre-trade planning. Identifying the next resistance above or below our call and put triggers, identifying 2 above or below, in order to really take out the emotions and try to put as much technical emphasis on our trading that takes away the emotions and that can help us build this consistency that we all strive for. Quick little announcement to conclude. So for my YouTube schedule, I'm going to stick solely to Sunday mornings EDU stuff. Throughout the week, every day, I'm going to make a watch list live on my account, and then I'll also post those recorded later in case you missed it, and that'll go through the breakdown of the flow, possible triggers, price targets, all that good stuff, as well as the strike prices that I would play in order to start really learning and going through this process to get it in and really help out people who may be struggling with that, or just people who are like, damn, I had a bad week, what did I do wrong? And then start to build up this confidence back, as well as be able to do it by yourself and become self-sufficient once you're able to replicate and do your own system.